Yeah, welcome to day 3 of our intensive class. Remember that today is day 3, the third day of our intensive class. We've done the first day, we've done the second class. Today is the third day of our intensive class. If you have not watched the recorded version of this class, do well to go and watch the first day, the day 1, the day 2, while today is day 3. On the day 1, we talked about fiat currency. We also talked about what cryptocurrency is, how cryptocurrency works. We talked about blockchain technology and why everyone needs to buy cryptocurrency. We'll discuss it in day 1. Please go and watch it, the full video. On day 2, we also talked about psychology of trading, how to become successful in trading. We talked about technical analysis versus fundamental analysis. What about the third day, which is today? What are we going to discuss today? Basically, one is key trading terms. As you start your crypto journey, there are some terminologies, there are some words you'll be hearing. So what are some of those words and what are their meanings? We will discuss it in our third day, which is today. We're going to discuss it today. Pay attention. Then we're also going to discuss about candlestick. What is candlestick? How does it work? We are going to discuss that. Then, the last but not the least, we are going to talk about Bitcoin farming. What is Bitcoin farming and how does it work? So let's start from the beginning, which is number 1, key trading terms. As you start your crypto journey, there are some terms you'll be hearing or some words you'll be hearing. So you need to familiarize those words so that whenever you hear it, you know exactly what the person is saying. Just like doctors have their own way of saying things, they have their own terms, the way they speak. Just like lawyers have their own terms, just like tailors, fashion designers have their own terms, things they call some thousand things. So in crypto, we also have our own terms. So one of the things you'll be hearing is bull, bear. Bull, bear. What does bull mean? Bull means positive, it means growth. While bear means negative or going down. That is what bull and bear means. Bull means positive growth, while bear means negative and going down. You can also hear the word bullish and bearish. Bullish means that the market looks strong, positive. It looks that the market looks strong, that the market looks like it's going up. That is bullish. You hear, I am bullish about this market. That what the person is telling you is that I'm strongly believe that the market will go up. The market is strong, it's going up, it's positive. Why if you hear somebody says I'm bearish in this market, it means that the market is looking weak. The market will go down, which is negative. You also hear a word like long and short. What does long and short means? Long means that you're expecting the market to go up, while short means you're expecting the market to go down. You will hear it especially when you are trading, leverage trading, future trading. You hear long this market, short this market. Then you will also hear something like market order. Use market order to buy the coin. What does it mean? It means that you buy at the current price of the market. Whatever the market price is, you just buy. You don't have control over the price. You just click on order, it executes immediately. You just want to buy now. Whatever the price is, you don't care, just buy. That is market order. You also hear something like limit order. What does limit order means? That you are in control of the price that you want to buy. You just set the price that you want to buy, then and wait until the market executes. You're only in control of the price you want to buy in limit order, but you're not in control of the time when the market will execute. That is what limit order means. So whenever you hear somebody say use limit order to buy it, it means that you are in control of the price you want to buy. You set the price you want to buy and allow the market to play out. That is limit order. There are so many terms. These are few. So let's continue. You will also hear something like stop loss. What does it mean? Stop loss is just used to protect the markets, to protect your losses or your capital. To protect your capital, you use stop loss. Sometimes the market, if it goes on against you, if you don't want to lose all your money, just set a stop loss. In case this market goes against me, if you get to this price, please take me out of the market. That is stop loss for you. But the stop loss is not guaranteed because sometimes stop loss fail to execute because of the high volatility in the market. You will also hear words like position yourself, swing trading, scalp trading. These are 3 different types of trading. You'll be hearing those kind of things. Position yourself, swing trading, scalp trading. What does it mean when they say position yourself? Positioning means you buy a coin for a very long time. You are buying it for a long time. You are not just buying it for trading and making money quick. No. Why swing trading means you are buying a coin and holding it for a short period of time, maybe hours or days. You just sell it. That's swing. As the market goes up and down, you take advantage of that. Why scalp trading is just within some minutes, less than a day. Just do your scalp and go out of the market. That is what scalp trading means. It means very short-term trading. Why swing trading means hours trading or day trading. Why position trading means that you are buying for a longer period of time. It could be 6 months, it could be 1 year or so. That is, you position yourself. You also hear something like altcoins. What is altcoin? Any other coin that is not Bitcoin is altcoin. Any coin at all that is not Bitcoin is altcoin. That is what it means. You will hear volatility. The market is volatile. It means that the market is swinging up and down. There is a long or wide swing up, swing down. That is what it means by volatility in the market. You also hear whales. Whales are people that have a significant number of coins or significant number of a particular crypto. They have more units than most people do have. Those people are called whales. They are market movers. They can control and influence the market, either in a negative way or in a positive way. So those are whales for you. If you hear whales, that is what it means. Those market makers, those people that have significant number of coin in a particular coin. So those are whales. Then you also hear something like laddering in. I'm laddering in. I'm laddering out. What does it mean laddering in? Buying small, small. I'm buying small, small. Laddering out, I'm selling small, small. I don't just want to go out of the market. I will just ladder out. You just be exiting small, small. While laddering in, you are just buying small, 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 small. You don't just want to buy everything at a time, at a go. That is what it means by laddering in. Why pump and dump means that you will see a coin with a positive candle, which is green candle, boom, goes up. The next thing you see it with a red candle, that is pump and dump. So these are basically some key trading terms you'll be hearing as you start your crypto journey, as you embark on your crypto journey. These are basically words you'll be hearing often and on. So let's move to the next segment, which is candlestick pattern or candlestick. When you hear candles, what usually comes to your mind? Anytime you hear candle, 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 what comes to your mind? What usually comes to your mind? What is candle? A candlestick shows an asset price movement over a set amount of time. Let me repeat myself, that a candlestick shows asset price movement over a set amount of time. What are we saying here? That candlestick shows a particular coin price movement over a period of time. That is what candlestick is. It shows price movement of a particular coin over a period of time. That is what candlestick is. And this candlestick can start from 1 minute to 1 day candle. Can also be 1 week candle. We have 1 month candle. It depends on the one you want to use. You can actually make use of any of those candlesticks. You can trade with those candlesticks. And candlestick basically form different 4 key levels. There are basically 4 key levels in candlesticks. Number 1 is the opening of the candle. Number 2 is the lower of the candle, while number 3 is the closing of the candle. Number 4 is the higher high of the candle. The opening, the close, the low, and the high. These are basically 4 key different levels that a candle forms. The opening, the close, the high, and the low. That is the 4 different things a candle forms. So anytime you see a candle, just look at these things. And whenever you see a green candle, it actually telling you that that candle opened from down and closed at the up. That is what it's telling you, that the candle opened from down and closed at the up. But if you see, anytime you see a red candle, it's telling you that the candle opened from up and closed down. That is why you see a red candle. Then sometimes there are some wicks that you'll be seeing in candlesticks. There are some wicks, there are some long, small, tiny wicks you'll be seeing in candle. Then there is also a body of a candle. That is where you see that thick red or thick blue. That is the body. So that is what candlestick is and how it works. Then the body of candlestick is used to show the difference between an asset opening and close price. That is what the candlestick body shows. It shows the difference between an asset opening and a close price. So if the candlestick is green, then the bottom of the body represents the opening price and the top represents the closing price, just like I said earlier. Whenever you see that this candle is green, it means that the candle opens from down and closes at the up. If you see red, it's the vice versa. That is how candlestick is. Then the wicks of the candlestick, there is something called wick of the candlestick, or you can also call it shadow. Some people call it shadow of the candle. So the wick of or shadow of the candlestick shows the highest and the lowest price reached by an asset at that given period of time. It is showing you how high that coin went to and how low it went to before that candlestick closed. So that is what those wick or shadow is showing, actually are showing you. So this is what you need to know about candlestick pattern. Actually, you can learn more about this candlestick pattern. That one will be in our advanced training. If you want to join our advanced training, do well to reach out to me so that I will tell you how you can go about it. If you want to know how you can read candlestick pattern and how you can use candlestick to trade, we can train you on that. Then let's talk about Bitcoin farming. What is Bitcoin farming? It means actually taking advantage of the swing of a coin. Taking advantage of the swing of a coin. You buy low, you sell high. You buy low, you sell high. What is your aim? Is to accumulate more coin, not to make dollar. Your aim should be to accumulate more unit of coin, not to make dollar. But your sole aim is to make dollar. But on the beginning, your main objective is to make more unit of coin. For example, you can actually start with 1 Bitcoin. For example, if it's Bitcoin you are farming, you can start with 1 Bitcoin and end up getting like 5 Bitcoin over a period of time. It's just a matter of looking for the opportunity on when to buy and when to sell. You buy, you keep your USDT. Okay, you buy, you allow the market to run. It gets to your take profit, you sell either part of your coin or you sell everything and wait. Immediately the market drops to a certain level, you enter the market again. That is called crypto farming. So you can trade, you can do your crypto farming, earn more unit of coin without adding extra money inside. And this will help you on the long run to make more profit than somebody who just bought Bitcoin or any other coin and just keep it that way. Why, if you are doing your crypto farming, you have the opportunity to make more unit of that coin than any other person. So it's important you learn this Bitcoin farming. If you want to learn more about it, we are also here to train you one-on-one on how to go about the Bitcoin farming. So what have we discussed so far this evening? We have talked about 1, key trading terms. We discussed about key trading terms: bullish, bearish, bull, bear, long, all those kind of words. We have seen the meanings or what they means or what they represent. We also talk about candlestick, how it works, the opening and the closing. We have basically four components of a candle. 1 is the opening, the closing, the lower and the higher high. That is basically the 4 components of a candle. We've also seen that if a candle is showing green, automatically it's showing you that the opening of that candle was down and it closed at the up. If the candle shows red, it means that the candle opened from up and closed down. That's why you see it show green or red. So these are some of the things we discussed so far in our day 3 of our 7 days intensive class. Don't miss the rest of the class. There are so many things we are going to discuss. In day 4, look at what we are looking at to get in day 4. 1 is wallet and security. Remember that security is very, very important, because if you don't secure your cryptos, you might lose all your money. There are some security tips I'll give you that will benefit you a lot. Thank you for joining today's class. Make sure that you watch this recorded video down to now. If you watch it up to now, put it on the comment section. Just write, I love what you are doing there. Put it there so that it will encourage us to do more videos to educate you. Thank you so much and have a fantastic day.